Tuesday, February 3rd, Central Banks, Credit, and Labor Markets. Good day, and welcome to today's in-depth Global Markets Update. As markets move into Tuesday, February 3rd, investor attention is firmly focused on central bank communication, financial system conditions, and labor market dynamics. While equity and bond markets continue to search for direction, today's calendar provides critical insight into policy transmission. Rather than one headline event, today's session is defined by a sequence of interconnected signals from the US, Australia, and Europe. Let's begin with the United States, where policymakers and data shape rate expectations. The US session begins with Federal Reserve commentary, starting with remarks from Fed President Raphael Bostic, followed later by Tom Barkin and Michelle Bowman. While not tied to immediate action, these speeches shape expectations. Investors will analyze the tone carefully, particularly how officials characterize inflation progress and labor market tightness. Any indication that inflation risks remain persistent could reinforce the higher for longer narrative. Conversely, acknowledgement of cooling demand or easing wage pressure would strengthen expectations for rate cuts. In parallel, markets received the Senior Loan Officer Opinion Survey, an underappreciated yet influential indicator. This report measures bank willingness to lend. Tightening standards often precede economic slowdowns. Reduced credit availability limits investment, hiring, and consumption, suggesting monetary policy remains firmly restrictive. Later in the U.S. session, attention turns to a closely watched labor indicator, JOLTS job openings for December. The data is expected to show openings near 7.1 million, slightly lower than the previous 7.146 million reading. The Fed monitors this because job openings provide insight into labor market tightness beyond headline numbers. A sustained decline would signal labor demand is cooling, reducing wage pressures and supporting disinflation. However, if openings remain elevated, it raises concerns that the labor market is still too tight for policy easing. Together, Fed speeches, credit conditions, and labor data provide a multi-layered assessment of the U.S. economy. In the Asia-Pacific region, focus shifts to housing activity and monetary policy credibility. New Zealand releases building permits data, offering insight into construction activity and private sector confidence. Housing is among the most rate-sensitive sectors, making this a useful gauge of higher borrowing costs. However, the spotlight today belongs squarely to Australia. The Reserve Bank of Australia announces its interest rate decision and monetary policy statement. The policy rate is expected to remain unchanged at 3.85% following the previous 3.6% level. While widely anticipated, markets are far more focused on the RBA's language and forward guidance. Investors will look for changes in inflation forecasts and assessments of domestic demand. The press conference will be scrutinized for signs of whether the RBA is leaning toward patience or a pivot. Additionally, Australian building permits data will provide further insight into housing demand effectiveness. Australian markets are likely to experience elevated volatility, with implications for regional currencies. Later in the global trading day, attention turns to Europe, with the release of the European Central Bank's Bank Lending Survey. This report is a critical measure of how ECB policy decisions are affecting the real economy. If banks report weak loan demand, it would confirm interest rates are weighing on Eurozone growth. Such an outcome would strengthen expectations that the ECB may need to ease policy. Alternatively, stabilization in credit conditions would suggest the economy is adapting to higher rates. For European markets, this survey provides insight into whether tightening is nearing its peak impact. Taken together, today's events reinforce a central theme. Policy is restrictive, but its impact is still unfolding. The U.S. balances employment with credit. Australia navigates inflation. Europe confronts fragile growth. Markets today are not reacting to isolated headlines. They are assessing consistency across signals. To summarize, U.S. messaging, Australia's rate decision, Europe's credit survey, and APAC housing. This is a session defined by policy transmission, with investors positioning for critical inflection points. That concludes today's Deep Dive Global Markets Update. Thank you for watching and stay informed.